This could be a trade idea. Somebody could be selling right now, and that's almost a 1 or 4 right there. So because this right here is a sweep of liquidity on the 1 minute. Right, we swept liquidity, had a little shift right there. See, let's see what happened, man. Let's see if I'm right here. If I'm right about this, I think I'm just gonna end the screen, y'all. Uh-oh, is my stop loss gonna get hit? See, a trade like this, if I was to take this trade on a prop firm account, I would probably only risk like maybe $100 on like 100K account. So if I had 100K account, I would risk like $100 to make $300. So that way, even if I did lose, it really wouldn't matter. But as I told you guys, I am not trading the London session this year. I'm not even trading the evening session for the New York session. I'm just trading one session all year round. That's going to be the morning session. If I can't find my trade during the morning session, I am done. Right, let's see what happened. Like if I would have taken this trade, I would have been in a little bit of profits right here. This is the slowest trade of all time, though. I would have just wanted to just get stopped out already at this point. And that's the reason why I said, I'm not trading London session. But if this isn't a breakaway gap, the sell could still work. This would be a safer stop loss, but it don't really give you the same risk to reward. But I would have rather had used this stop loss because if it goes all the way up there, then I don't want to be in a trade anyways, right? So for me, I would have just risked something really small amount. So, but even when you risk like small amounts and you're trading a London session, those can still add up too. You could take 3 or 4 trades in a row before you know it. Like if you risk $100 here, $100 there, you can be down almost like a half of a percent within one session. So that's why I don't really like to trade the London session anymore. It's just too inconsistent for me. Like it moves way too slow. You know, me, I like to like trade within the 2 hour period. Try to find maybe one trade that like really can hit one really good trade, or sometimes I might try to find like 2 trades, and then I'm done. Right? If I can make a half of a percent or like even just 1%, I'm pretty much good to go. Now because at the end of the day, you guys, you got to remember, most people aren't beating the market. So if you can start your day off with a win, why not just take that win and keep going and just move on, right? A lot of people can trade really well, but the problem is it's like, you know, they try to beat the market up too much, right? So let's see. Okay, you would have got stopped out on this trade idea. Now let's see if you would have used a safe stop loss, if the trade idea would have worked. Let's see. This is how I pretty much learn how to trade. You have to do some hypothetical trades from time to time, right? Do some hypothetical trades, save the capital, even if it's the prop firm money, man, save it, because this is way less stressful just sitting here learning versus like trying to actually, beat your phase 1 or beat your phase 2. It's not even worth it. And the reason why I say it's not worth it is because, as I already explained to you guys, this right here could have been acting as a breakaway gap. Right, we already swept liquidity. Remember I said over here, right, we swept all of that liquidity coming down. The market started to make some bullish price structure. Right, we swept this liquidity right here. And now, we could just keep going up top, but price don't really look that strong either. It don't look weak, but it don't look that strong. So we measured out our range. What we're waiting for is price to come in a discount range. So even this trade right here, that's why I was giving you a hypothetical trade. But if I'm going to buy, right, I want to be on the right side of the market. We have some equal highs on a 1 minute time frame up here. So we know this is going to be our liquidity, but we just don't know how long the market is going to bounce around and sweep some of this, short-term liquidity before it does its job up here. All right, what's going to be? See this hypothetical trade, and this is another reason why you do not counter trend. Do not counter trend trades. Right? As soon as you see all of this bullish price action after a sweep of liquidity, do not try to, take a small trade going in the opposite direction, because even if you're right, it's going to just be stressful. But like I said, that's why I would have had my, original stop loss right here. So if I get stopped, I know I'm on the wrong side, and don't do that again, right? But sometimes I'm not gonna lie, if I do risk $100, I give myself room to move my stop loss. So let's say if I move it up here, maybe I'm right on the trade, but I just took an early entry, right?